Hey everyone, and welcome back for another deep dive. So you guys wanted the inside scoop on Coinbase BTC as collateral for Curve USD.
Right. Seems to be a hot topic lately.
But we took a deep dive into the research, and let me tell you, things are getting interesting.
What's really caught my eye is how Coinbase BTC is like emerging as a real contender to wrapped BTC,
Yeah.
especially when we're talking about collateral and DeFi protocols.
Okay, so we're going to break this down for our listeners. We pulled some data from a Dune dashboard, and it shows that the total value locked for Coinbase BTC, it's been climbing steadily since it first launched back in September 2023,
Right.
particularly on the Ethereum network. Now, this is a pretty stark contrast to wrapped BTC, which has kind of plateaued since around March of the same year.
Yeah, and here's the thing that really jumps out. Even though Coinbase BTC's total value locked is still smaller overall, its on-chain volumes are already pretty much neck and neck with wrapped BTC.
That is interesting.
That tells me there's a serious appetite for this newer asset.
So does that mean we're looking at the future king of collateral here? Could Coinbase BTC actually dethrone wrapped BTC?
It's a definite possibility, but hold your horses.
Okay.
Adding a new collateral type to a system as complex as Curve USD takes a ton of careful consideration and analysis.
Right.
We can't just throw it in there and hope for the best. You know what I mean?
Of course, of course.
That's why they're running these simulations.
Right, and they're using two different models to really put the protocol through its paces, the Llama simulator, and then their own proprietary agent-based simulator. They call it GRV USD risk.
So the Llama simulator, it focuses on a single large borrow position using historical data to find the best settings to kind of minimize losses during those soft liquidations.
Okay, so testing how well a position holds up against price swings, basically.
Exactly.
And what about the KRV USD risk?
Now that's where things get really cool. It simulates like the entire Curve USD system with multiple borrowers and then just throws all these simulated market shocks at it to see what happens. They're checking for things like bad debt and gauging the overall health of the whole protocol.
So like a stress test for this system.
Yeah, like a financial earthquake, exactly. The real beauty is they're using both simulations together. It's like a double check system to make sure their parameter recommendations are as solid as a rock.
So what are they finding? What are these simulations telling them?
Well, the interesting thing is the analysis is pointing towards a slightly more aggressive approach for Coinbase BTC compared to other markets they're considering,
Okay.
potentially allowing for a higher maximum loan-to-value ratio.
That is interesting. But before everyone runs out to max out their loans, we need to talk about this debt ceiling.
Right. The debt ceiling, that's a big one.
Why is it so important?
It's all about finding that balance, between letting the system grow and keeping it safe from too much risk. It's a delicate dance.
So if they set the debt ceiling too high and then the market crashes, the protocol might not be able to handle all those liquidations.
Exactly.
Okay.
That could lead to bad debt, and nobody wants that, right?
Definitely not.
And the thing is, we got to remember, DeFi protocols, they don't exist in a vacuum. We need to consider the overall market exposure to Coinbase BTC across, the whole ecosystem.
Right. So how do they go about actually determining a safe debt ceiling?
Well, they're looking at a whole bunch of factors. You've got global market liquidity for Coinbase BTC, how volatile it is, how borrowers on Curve USD are acting, and then this thing called liquidator profit.
Oh, okay. So what is liquidator profit?
Liquidator profit, it's basically the incentive for people to actually carry out liquidations when they're needed.
Oh, okay.
If liquidations get too big, that profit margin, it shrinks, and then it might not be worth it for liquidators to do their thing.
Okay.
And that's a situation we definitely want to avoid, right?
Right. So that's why they're recommending a more conservative debt ceiling, for now at least.
Yeah, they're playing it safe while the market matures.
Makes sense.
But don't worry, they're keeping a close eye on things, and they'll be adjusting that ceiling as we go.
And they're also working on a Curve risk portal, which is going to provide some real-time insights into recommended debt ceilings.
Yeah, full transparency.
Love it. All right, let's move on to oracles.
Oracles, yeah, those are essential.
Yeah, because they're like the information lifeline of any lending platform.
Right. They provide those crucial price data points for collateral and all the borrowed assets.
And Curve USD has kind of a unique approach to its oracle. Right.
Yeah. Instead of relying on those spot price feeds, like a lot of other protocols, they use what's called an exponential moving average.
Right.
Or EMA processed price feed. This helps to smooth out the price volatility, and it reduces the risk of aggressive liquidations when prices take a sudden swing.
Yeah, it's like shock absorbers for the system.
Exactly.
Okay.
They actually initially had a chain link backup price feed too as an extra layer of security, but after some testing and analysis, they decided to remove it.
Okay.
The EMA processing was robust enough on its own.
And speaking of testing, they've been looking at the Coinbase BTC wrapped BTC stable swap pool
Right.
to try to figure out the best EMA time for this oracle.
Yeah, they're examining volatility, different types of errors, and how well that EMA price tracks the actual spot price.
Okay.
And what they found was really encouraging. A 10-12-minute EMA time seems to be the sweet spot.
Okay.
It's the standard for curve pools anyway, so that's good news.
Now, I know what some listeners might be thinking right now. What about someone manipulating the oracle? We've seen this happen with, DAX pool prices. It's a valid concern.
Absolutely, it's a real risk.
Right.
But their analysis suggests that the EMA processing and the tools they're using to assess manipulation risk makes the Coinbase BTC pool with its 10-12-minute EMA pretty darn resilient.
Okay, so it sounds like they've really thought this through and they're not taking any unnecessary risks. But this is really just the tip of the iceberg.
Yeah.
There's a whole lot more to explore when it comes to quantitative research and curve. They're even thinking about adding wrapped ether as collateral.
Right.
And then these sophisticated scoring systems to assess market health. It's pretty amazing stuff.
It really shows their dedication to building a secure and sustainable DeFi ecosystem.
Right. And we're just getting started. But before we dive into the fascinating world of caffeine and what it means for the future of quantitative research at Curve,
Yeah, before we get to that.
let's take a step back and think about what this all means for you, the listener. Why should you care about these simulations and analyses and all these complex details?
This isn't just theoretical stuff.
Right.
This directly impacts the stability and the growth of the DeFi ecosystem that you're participating in.
Exactly.
These analyses, they're the foundation for all these informed decisions that are shaping the protocols you use, the collateral, you deposit the future of DeFi.
And speaking of making informed decisions, the folks at LlamaRisk are working on something truly game-changing. They're calling it Caffeine,
Caffeine.
a next-gen simulation tool built specifically for Curve USD.
It's going to revolutionize the way they analyze risk.
Yeah, Caffeine's going to let them run simulations crazy fast scale to handle all these new contracts and upgrades, explore even more market scenarios.
It's all about staying ahead of the game.
Right, because DeFi never sits still.
Exactly.
And this new tool, it was born out of necessity. The tools that are available right now for simulating on-chain scenarios, they're often fragmented and incomplete.
Yeah, some focus only on price impact, others on liquidity or parameter optimization. There's no one tool that brings it all together.
And a lot of the existing simulators, they rely on approximations instead of direct blockchain interactions.
Yeah, because running a full blockchain simulation, it can be painfully slow.
Oh, I bet.
So they could be missing crucial edge cases and leaving the protocol open to risks they didn't even see coming.
But Caffeine is changing all that.
Yeah. By running on a full EVM implementation, Caffeine captures the precise behavior of every single agent in the system, from traders and liquidators to arbitrageurs.
So they can manipulate time-control block production and simulate all sorts of crazy market conditions and price scenarios. It's like a time machine for DeFi.
Yeah, exactly. Imagine being able to test a year's worth of market activity in just a couple of hours.
Wow.
Caffeine will let them stress test the protocol under extreme conditions, like network disruptions or sophisticated attacks.
Right.
But it's not just about stress testing. Caffeine is also going to be huge for parameter optimization. Right now, that process is limited by the performance of a single machine, so they can only explore so much of the parameter space.
But with Caffeine, they can run thousands of simulations at the same time, each with different configurations.
Yeah, it's like having a supercomputer fine-tuning the protocol.
That's pretty awesome. So what does this all mean for Curve?
It means even more rigorous security analysis.
Right.
They'll be able to identify those subtle attack vectors that other tools might miss.
And, of course, it means finding the optimal settings that allow for growth without sacrificing security and stability.
Right, and staying ahead of the curve in the DeFi world.
But let's not get ahead of ourselves.
Yeah.
Before we unleash the full power of Caffeine, we should take a closer look at some of the other exciting research projects in the pipeline.
Right. These projects are already shaping the future of Curve.
For example, they're looking into adding wrapped ether as collateral to the Curve USD mint markets.
Yeah, remember we were talking about Coinbase, BTC's rise?
Yeah.
Well, wrapped ether is another asset with huge potential.
Right. And what about those sophisticated scoring methodologies we mentioned earlier?
Yeah.
The ones that are going to assess market health in real time.
Yeah, those are becoming a reality.
So cool.
Imagine a dashboard that gives you a crystal clear picture of how healthy a particular market is.
Nice.
That's the power of these scoring systems.
They're also developing advanced interest rate models for the lending markets on LlamaLand.
Right, they want to make sure utilization is balanced and market conditions are optimal.
And we can't forget about the peg keepers, who play such a vital role in maintaining the stability of Curve USD.
Yeah, they're constantly working to onboard new peg keepers, diversifying the types of collateral backing the stablecoin, making it even more resilient.
But onboarding new peg keepers isn't a walk in the park. They're conducting rigorous risk analyses of all these different stablecoin contenders, looking at both on-chain and off-chain metrics to make sure each new peg keeper makes the ecosystem stronger.
It's a detailed process, but it's absolutely necessary to keep Curve USD reliable and trustworthy.
And this is really just a snapshot of all the incredible research and development happening behind the scenes at Curve.
It's all thanks to that dedicated team at LlamaRisk who are pushing the boundaries of what's possible with quantitative analysis and helping to shape the future of DeFi.
So what do you think? Are you as excited about the future of Curve as we are? Let us know.
Yeah, we'd love to hear your thoughts.
But for now, we're going to take a quick break. When we come back, we'll delve even deeper into the world of quantitative research, exploring the implications of these advancements and what they mean for you, the DeFi user. Okay, so we're back and ready to go even deeper into the world of Curve and all the fascinating quantitative research that's going on behind the scenes.
And trust me, we've only just scratched the surface. We talked about simulations, debt ceilings, oracles, but now let's zoom in on something that's on every DeFi user's mind: risk.
Absolutely. Understanding and mitigating risk is crucial in any financial system, but especially in a space as dynamic and innovative as DeFi.
Couldn't agree more. And that's exactly where LlamaRisk is making some serious waves with their research on market scoring. Remember those real-time dashboards we talked about?
Yeah, the ones that give you a snapshot of a market's health.
Those are powered by these sophisticated scoring methodologies that LlamaRisk is developing.
So what are they actually looking at when they're coming up with these scores? What factors are they considering?
It's a pretty comprehensive approach. They're examining a whole range of metrics both on-chain and off-chain, things like liquidity, depth, trading volume, how the borrowers and lenders are distributed, the stability of the underlying collateral, even the behavior of those big players in the market.
So they're not just crunching numbers, they're also factoring in human behavior and how actions taken by whales or institutions can impact the market.
Exactly. It's about capturing the full picture and understanding all the different factors that contribute to a market's overall health.
And what's really cool is that these scoring systems are dynamic. They're constantly updating as market conditions change,
Giving you a real-time pulse on the DeFi ecosystem.
so you can use these scores to assess the risk profile of different markets, compare lending and borrowing opportunities, and even spot potential warning signs before things go south.
It's not just about protecting yourself from losses, it's also about finding opportunities, markets that are poised for growth, emerging trends.
I like it. So let's talk about liquidations. We touched on them briefly, but let's dive a bit deeper.
Liquidations, they're the mechanism that keeps lending platforms solvent. When a borrower's collateral falls below a certain threshold, their position is liquidated to cover their outstanding debt.
It's like a safety valve that prevents the system from collapsing under bad debt.
And with Curve, USD liquidations are even more interesting because of their soft liquidation mechanism. Remember how we talked about arbitrageurs gradually converting collateral into Curve USD to minimize losses for borrowers?
Right. It gives borrowers a chance to recover before their position is completely wiped out.
But even with soft liquidations, there's still a need for efficient and reliable hard liquidations sometimes, and that's where understanding global liquidity becomes really important.
Because if there's not enough liquidity to handle those liquidations, they might not be profitable enough for liquidators to get involved.
And if the liquidators aren't incentivized to step in the system, could freeze up, putting the whole protocol at risk. That's why liquidator profit is so crucial. It ensures someone is always there to step in and stabilize the system.
It makes sense. So it sounds like LlamaRisk is really focused on optimizing the entire liquidation process.
Absolutely. They're looking at things like slippage, the impact of liquidations on prices, and how liquidators themselves are behaving. They want to make sure the system can handle large-scale liquidations smoothly and effectively.
Okay, so it's all about maintaining the stability and resilience of the protocol, even when the market gets volatile. Now let's switch gears and talk about interest rate models. You know, the ones that determine how interest rates on lending platforms adjust based on supply and demand.
Finding the right balance there is really important for a healthy market.
If interest rates are too low, borrowers might flood the platform, leading to overutilization and squeezing out lenders. But if rates are too high, it could discourage borrowing and slow down growth.
It's a delicate balancing act.
So how is Loris approaching this?
They're developing these sophisticated models that consider a whole bunch of factors: market volatility, utilization rates, even the behavior of different types of market participants.
It sounds like they're running some pretty in-depth simulations to test these interest rate models under different market conditions.
You could say that. It's like a financial laboratory where they're experimenting with different formulas and algorithms to find the right recipe for a healthy and sustainable lending market.
And all this research boils down to creating a more robust, efficient, and user-friendly DeFi ecosystem.
An ecosystem where risk is understood and mitigated, where users have the information they need to make good choices, and where innovation can thrive.
And this is why I love these deep dives. We're not just talking about numbers and code. We're exploring the building blocks of a financial revolution. A revolution powered by data transparency and the idea of building a better financial future for everyone.
Well said. But before we get too caught up in the grand vision of DeFi, let's focus on one of the most important pieces of this ecosystem: peg keepers.
The unsung heroes of stablecoins.
They play such a crucial role in keeping stablecoins like Curve USD stable, making sure their value stays pegged to the underlying asset, usually the US dollar.
So how do they actually do it? What's the secret sauce?
Peg keepers are basically entities that can mint and burn stablecoins depending on market demand. When the price of a stablecoin starts to drift away from its peg, they step in to restore balance.
So if the price of Curve USD drops below $1, peg keepers will burn some of their Curve USD holdings, reducing the supply and pushing the price back up.
And if the price goes above $1, they'll mint more Curve USD, increasing the supply and bringing the price back down.
Like a constant balancing act.
And the diversity and stability of those peg keepers are essential for the overall health of the stablecoin. That's why Loris is so involved in vetting potential peg keepers and conducting those thorough risk assessments.
It sounds like they're not taking any chances. They're looking at everything from the peg keeper's track record and financial stability to their commitment to transparency and how well their values align with the Curve ecosystem.
It's a meticulous process, but it ensures that Curve USD remains a reliable and trustworthy stablecoin.
Now let's talk about something that's not directly related to Curve, but has huge implications for the DeFi world: the increasing adoption of Coinbase BTC.
Remember how we were discussing its impressive growth and how it could potentially challenge wrapped BTC? Well, this shift is impacting the entire DeFi ecosystem: protocols, liquidity providers, even everyday users.
It's like a ripple effect, changing the dynamics of the whole space.
As Coinbase BTC gains traction, DeFi protocols need to adapt by integrating it and ensuring compatibility. Liquidity providers have to adjust their strategies. And of course, everyday users like you need to stay informed and understand the risks and opportunities.
It just goes to show how dynamic DeFi is, how one asset can set off a chain reaction across the entire ecosystem.
It really highlights the importance of staying informed, being adaptable, and embracing the constant evolution of this space.
But before we get swept away, let's take a moment to appreciate the crucial role of quantitative research in helping us navigate this complex and ever-changing world.
Because without the data, the analysis, the simulations, and that constant pursuit of knowledge, we'd be lost at sea.
The work being done by Loris and other quantitative research teams is like a compass guiding us, a lighthouse, warning us of danger, and the engine propelling us forward.
It's the foundation of a more stable, secure, and accessible financial future.
And that's what makes these deep dives so rewarding. It's not just about understanding Curve or DeFi. It's about appreciating the power of knowledge, the importance of innovation, and the potential of this technology to change the world.
Couldn't have said it better myself. Now let's take a quick break, and then we'll wrap up our exploration of Curve and its journey into the world of quantitative research.
Welcome back to our deep dive, everyone. We've spent this episode talking about the really crucial role of quantitative research in DeFi.
Yeah, it's been quite a journey.
So much ground covered: simulations, debt ceilings, oracles, market scoring.
Yeah, we really went deep.
Now, as we wrap things up, it's time to kind of bring it all together.
So what does all this mean for you, the DeFi user?
Yeah, what's the takeaway here?
I think the thing is, DeFi can be pretty intimidating.
Right.
It's complex, it's always changing, and there's definitely risk involved.
Yeah.
But what we've seen today is there are all these incredibly smart people working behind the scenes to make DeFi safer, more efficient, and more user-friendly for everyone.
It's reassuring, right?
It is, they're building these incredible tools, running complex simulations, crunching mountains of data, and always pushing the limits of what's possible.
And that's really empowering. You don't have to be a math whiz to participate in DeFi. You can use the research and the work of teams like LlamaRisk to make informed decisions.
Exactly.
But you shouldn't just blindly trust everything you see or hear.
Right. Critical thinking is super important in DeFi more than ever.
Absolutely. Question everything, do your own research, and don't hesitate to ask questions. The DeFi community is really supportive, and there are tons of resources out there to help you.
Yeah, there's a lot to learn, but it's worth it.
And remember, this is just the beginning. DeFi is still so young, and the pace of innovation is just mind-blowing.
Yeah, what we've talked about today, it's really just a glimpse of what's to come.
It's like we're all on this rocket ship taking off. The future of finance is happening right now, and you can be a part of it.
That's pretty exciting.
It is. But before we sign off, we want to leave you with something to think about.
Okay, a parting thought.
We've seen how quantitative research is shaping the DeFi world, but what about the human side of things? How can we make sure this technology is used responsibly, ethically, and for the benefit of everyone?
It's a great question.
The future of DeFi isn't just about algorithms and protocols, it's about people.
It's about creating a fairer, more transparent, and more accessible financial system for all of us.
That's a future worth fighting for. Thanks for joining us on this journey into the heart of Curve and the amazing world of quantitative research.
It's been a pleasure sharing these insights with you.
And until next time, keep exploring, keep learning, and keep building the future of finance.